investors, people who buy things below fair value, that's what an investor's supposed to do, would be accumulating Bitcoin here, right? If the price is 30 and the fair value is 55, you would be a buyer. So as that happens, it slowly accretes toward fair value. When the halving occurs, suddenly the price has to rise a little faster.
Hey guys, welcome back to Everyday Finance. In this video, Mark Yusko prediction about is the money laundering not the fines that they've admitted to and paid equals the market cap of Bitcoin. Mark says yeah, I mean that's an amazing stat, and that's a little outdated because I think it's only $500 billion an hour up to $700 billion, but still $500 billion is a lot of money to pay for malfeasance. And so now we have this triple entry accounting system, and that Cathie discusses this decentralized system where we don't have to rely on the Medicis or the Morgans or the Rothschilds or anybody else. It's just you and me and this global decentralized network that is immutable and permanent that we don't have to debate and we don't need anybody else like. And lots of things Mark discuss, so please watch the video to end and like, share, subscribe our channel Everyday Finance. Thanks.
Yeah, look, and I actually agree with what she's saying in the sense that we have for 800 years-ish been ruled by this system. And I used to tell the story, Scott. It's funny. I just got back from a vacation. I took a long vacation for the first time in a long time, and it was awesome. We went to Spain and Portugal. And for years, I had talked about, and I think even with you on the show, I've talked about, the Medicis, 800 plus years ago, invented fractional reserve banking. And they borrowed, aka stole, as Picasso said, good artists borrow, great artists steal. They stole from some monks this idea. Now, I didn't know until a couple weeks ago when I was in Portugal that those monks were the Knights Templar. That these Portuguese monks, the Order of Christ, the Knights Templar, the cross, that here's the crazy thing, Scott. Once you hear this story, everywhere you look, there's the cross.
Oh, everywhere. That happened to me after I watched Indiana Jones and the Last Crusade, but yeah, go ahead.
Yeah, but every monument, every little sidewalk, little inscription, every Portuguese flag, everything, like every football coat of arms. Like Barcelona's coat of arms has the Order of Christ right there. So Knights Templar everywhere. But this fractional reserve banking system, it's not the devil that everybody thinks it is. It's just fragile, and it's subject to abuse. And I've used the example all the time. In the old days, I lent you money. I wrote down in my ledger. I kept the ledger because I was the rich guy. You needed the money. And I wrote down, you owe me $100. You come back to pay me $100. I've tampered with my ledger. You show up with your 110 to pay me back. And I'm like, oh, but Scott, it says right here, you owe me 200. And you had no recourse because there was no other ledger. So the Medicis, borrowing the Knights Templar, said, okay, Scott, you keep a ledger, Mark, you keep a ledger, and we, the benevolent Medicis, for a small fee, will arbitrate that the ledgers match. But here's the thing. They're corruptible, and I'm a corrupt guy. So I go to the Medicis, and I say, you know what? Scott owes me 100, but I'm going to change it to 200, and I'll give you half. And they're like, done. So you come back to pay me 100, and the book says 200, and you're like, hey, guys, it's 100. And they're like, Scott, you must have written it down wrong. I'm sorry. And so you have to pay 200. And so for years, the system has been corrupted, and we've seen lots of examples from the spoofing and the fines. My favorite stat on that is the fines paid by the global banks. The fines. Not the malfeasance, not the money laundering, not the fines that they've admitted to and paid equals the market cap of Bitcoin.
Yeah.
I mean, that's an amazing stat. And that's a little outdated because I think it's only 500 billion and now we're up to 700 billion. But still, $500 billion is a lot of money to pay for malfeasance. And so now we have this triple entry accounting system, and that Cathie discusses, this decentralized system where we don't have to rely on the Medicis or the Morgans or the Rothschilds or anybody else. It's just you and me and this global decentralized network that is immutable and permanent that we don't have to debate. And we don't need anybody else. Like if I want to send you money right now, You have to have a bank account. I have to have a bank account. We pay a fee, wire transfer fee or whatever. But that's antiquated technology. That's an old system. In the new world, this is the other cool thing I learned. In 1492, there was no new world, right? Where we're sitting today was forest and trees and not a lot of stuff. And Queen Isabella, the first venture capitalist, gave Christopher Columbus and Vasco da Gama. He went to India, and Christopher went, thinking he was going to India, went to the New World. Long story short, she was the first venture capitalist. Why? Because she took 20% of what they carried back, carried interest. I love that. And, the Spanish and the Portuguese were rich for a long time. They were the center of the universe. Portuguese was the first world reserve currency, then the Spanish when they took over. And it's like, how could that happen? Well, it's because there was nothing here. There was nothing. And something I never thought about. This is a kind of cool stat or cool little thing. The horse, the cow, the pig, the chicken, all of them, not endemic to North and South America. The potato, not from Ireland. The tomato, not from Italy. Those are from South America and all the other stuff. And it all came through Seville, Spain in the late 1400s. That's a pretty cool thing, because what happens is as the price rises, it attracts attention, right? Movement attracts attention, right? And like if my son or daughter were to, move across the frame in the back, I would look, because that's what, we hunters do, and we follow movement. And so what happens every 4 years is we have these seasons. And today we're in crypto summer. Well, what is crypto summer? Summer is the period leading up to the halving, the year before the halving. And what does that mean? Well, that means we drift from below fair value. Okay. Now, why are we below fair value? Well, because we had winter 2 seasons ago that pushes the price down. Well, why does winter happen? Well, because people freak out because of the parabolic top in the previous fall. And then we go through spring, which is kind of the bottoming process. That ended, I think, from June to June. And now we're back in summer. Well, if the Metcalfe's Law model that Tim Peterson, that I use, says fair value is 55K, investors, people who buy things below fair value, that's what an investor's supposed to do, would be accumulating Bitcoin here, right? If the price is 30 and the fair value is 55, you would be a buyer. So as that happens, it slowly accretes toward fair value. When the halving occurs, suddenly the price has to rise a little faster. Well, now that draws in speculators. Well, what are speculators? Speculators are people that don't care about the fair value. They don't care about the price. They just want to make money. So they're drawn to the movement. Well, so in the fall of the cycle, okay, the year following the halving, what you get is increasing velocity and increasing interest. The media comes in, you got lots of clickbait, and suddenly it starts to go parabolic. Well, here's what happens. Toward the end of that cycle, that fall period, you get the leverage. And the leverage is what causes the parabola. And that's true of everything. Look what's happening in stocks right now. Why are stocks going like this? Why is Nvidia going like this? Leverage and short selling and short covering. That's what it is. There's no chance that Nvidia is worth, in terms of value, its current price.
I agree.
It's not possible. It's not mathematically possible. It's a great company. They make great products. They're going to sell a lot of chips to people thinking that AI is going to change the world, even though AI is not new. It's a 55-year-old overnight success story. And, we're all not going to be replaced by ChatGPT. I got news for you. But that's not the point. The point is leverage. Margin debt is accelerating again. And so leverage is causing prices to be crazy. So we're in a parabolic blow-off peak in stocks, I believe. And we will have another parabolic blow-off peak kind of late 2024. Halving happens April, May. By the end of that year, we'll be in the parabolic peak. And look, in the previous peaks, fair value was X. We got to 2, 3, 4 times fair value.
Fair value was probably where we're at now in the last cycle. Should have been in the 30s. Probably. Maybe 40.
And that's my point. fair value, when we hit 60, the model said fair value was 20. It had been up to 30 and it had fallen to 20. Because remember, transaction volume fell and everybody was afraid. And so we got to 3x because of the crazy Binance 100 times leverage and all the stupid stuff. And that's fine. In the previous cycle in 2017, we got to 2 times fair value was 10. We got to 20. Okay, that's fine. So this time, fair value will accrete according to the model. If things stay the way they are, fair value will accrete to around 100K by the halving. Okay, well, why is that?
So that means we go to 300 because we get leverage.
Well, no, and again, I think the leverage will be smaller this time. I don't think we get to 3, but could we go to 2? Sure. Look, the math of Bitcoin is pretty easy, right? We take the total market cap that we think is achievable. We divide by the number of coins that are still in circulation, and you get a number. And everybody fixates on that number, but I always think it's the wrong number, right? Because it's in our currency. So you and I both know 1 Bitcoin is 1 Bitcoin. It has been the entire time. That's what we're trying to move toward, is a world where Bitcoin is the unit of measure. What we're talking about here is dollars per Bitcoin. And that price that everybody fixates on isn't so much Bitcoin getting better. It's actually our money, right, the dollar, getting worse. It's, like trying to buy a cup of coffee that, used to be a quarter, now is $5 or $6. It's the same cup of coffee. It does the same thing. It delivers the same amount of caffeine, unless you put whatever Cathie's putting in hers. It's, so anyway, the math of just pick a number, 500K, 600K. Let's do that math together. Where does that even come from? Well, if you have a base case that the market cap of Bitcoin should roughly equal gold's market cap. Okay, a reasonable assumption. If we say that Bitcoin is digital gold and it plays the role of base money, right? Money, as we know it, is really a small thing. It's gold. And Mark, what do you mean? I use cash. No, that's debt. That's a currency, but it's not money. Money is an asset that exists in the absence of a liability. The only thing in the world that does that for 5,000 years is gold. Now, people have dabbled with other stuff, but ultimately, all of the other stuff that we think of as money is backed by debt. It's currency, and that's why it ultimately devalues and ultimately inflates away, and why in the history of the world there have been 775 paper currencies. 3/4 of them no longer exist. I mean, they literally went away. And the same is happening in real time to the dollar, which is why Larry Fink, like not exactly, Joe from some, Twitter handle. We're talking one of the most powerful people in the world, manages, he's in charge of a company that manages close to 10 trillion with a T dollars, said that you should put some money in Bitcoin, in my ETF, of course, that will protect you from devaluation of the currency. I mean, he actually said it. And so this is a long answer, Scott, to how do you get to 625?
I mean, that's just 20x market cap from here, right? So gold is 20x our market cap. Easy, 600, done.
Exactly. No, that's it. And that's all it is. And now the one adjustment I make is the total market cap of gold is 11 trillion. Okay? Total market cap. And we're about $500 billion in Bitcoin. So total market cap, actually, we're higher than that? What is?
I think it's 600 or 700. I've got it here.
700.
But yeah, I mean, somewhere in the ballpark. I can get it. Yeah, the whole total now is at 1.2. So yeah, we've grown.
Yeah,
It's
so
581 billion. Yeah.
Okay, so 600.
Bitcoin.
So let's round gold to 12 because it probably is, and your 20x is right.
20x.
But here's the thing: half of that gold isn't money; it's jewelry and chalices and gold leaf and stuff that isn't really used as a monetary base. So that half is 6 trillion. That's a 10x from here. Current price of 30, 10x is 300K. Okay.
Take it.
300K to me is so easy. We don't even have to debate, because the idea of Bitcoin being better than gold as a store of value, as a unit of account, as more portable. Like I say all the time, if I had a bar of gold, which maybe at my other house I do, but if I had a bar of gold and I wanted to break it in half and send you half, I'm not strong enough to break the bar of gold, first of all. Second, I couldn't stuff it in the computer to send to you. I want to send you some Bitcoin. I punch a couple buttons and you got Bitcoin.
We're done.
So that's a superior store of value and medium of exchange. So I believe Bitcoin gold equivalence is a no-brainer. Now, when? Tomorrow? Next day? I don't really care. Sometime in the future, that's easy. So that's that 300K number. I've been using 250K